right, good morning. How are you? Happy Friday. Oh, that's a good transition. Can I catch it? Yeah. All right. Good morning. How are you? It's Friday. You made it. Hey, you thought this week was interesting. Next week's even more interesting. Wowzer. So anyways, welcome to Forex.Today, the YouTube community. More than 20,000 foreign exchange traders. My name is Wayne McDonald. I will be your guide on this journey we call Forex. Thank you for being part of the community and making it an awesome place. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance because trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble. Focus on the long term, never risk money you cannot afford to lose. All right, yeah, aha. Hey, what do you want to cover today? I popped a poll. Hopefully you participated. In the chat area, there's a poll. It says, what are you trading today? Euro, pound, CAD, or Kiwi? Let me know what's on your mind, and I will start with that pair. With that being said, I am a servant. How may I serve you? Let me know how I can help, and I will do my best to provide. Okay? But usually the squeaky wheel gets the grease. So again, let me know how I can help, and I will do my best. Trader psychology, I'm writing a book on that. Fundamental analysis, I'm writing a book on that. Technical strategies, I'm writing a book on that. Cool. Okay? Cool. And by the way, if I ever say something intelligent, which is, like in golf, every third shot needs to be brilliant. And if so, you'll do okay. Well, all right. So if every third thing I say is not stupid, that's cool. Write it down and then let me know if you're like, hey, Wayne, that's a keeper. Put it in one of the books. I'd appreciate that. In fact, I'm going to create a website just for you to help me write a book for you. We're going to write a book together. And it's not going to be a $90 book either. No, right? So anywho, I'm hoping I can get it down to $22. So anywho, help me help you. In the meantime, if you look in the description below the video, there's a link to a free course. I think you want to check it out, how to possibly triple your profits without changing anything. Your charts are good enough, my friend. It's not what's holding you back. So check that out. There's a link to FX Bootcamp. There's a link to quantbox.co. There's a link to Trader's Way, an ethical foreign exchange broker. Yeah, can you imagine such a thing? Kind of like a unicorn, huh? A trustworthy, ethical foreign exchange broker? There is such a thing? Yeah, it's true. It's not a Sasquatch. Okay? So check them out. Fast execution speed, narrow spread, huge swaps, above average, good looking customer service people. Yeah. Tradersway.com. So nonetheless, in the description below, there are links for you. Check them out. Coolio. I need a few more votes. Would you please take the opportunity to click the poll. Tell me what's on your mind, and we will start there. Meanwhile, I'm looking forward to something, a new cigar. I haven't tried this one yet. This is the one that the guy from Metallica, James Hetfield, is doing. Oh, doesn't zoom. Anyways, I'm looking forward to that. A little special treat while I work the rest of the morning. Yeah, I'm waiting for you to answer the poll, by the way. There's a bit of sweetness. So it's been fermented extra long, I would imagine, for that. And there's a slight smell of hay, which I mean, there's lots of Seiko leaves in here. I suppose a little bit of coffee. So what that tells me is it's been fermented a little longer, so the Maduro is pretty obvious. But there's a lot of leaf from the center of the plant. Not too high, not too low. So it'll probably give lots of white smoke when I light it up. King Chromium's in the house. Hey, good to see you, Raymond. What's going on, Raymond? All right, let's end the poll. We have enough votes. Okay, statistically relevant. And we're leaning on the euro. And then it's a kind of a split because one vote would swing that one way or the other. So mostly a focus on the euro. So let's start there. How should we do this? Euro dollar, I guess. Okay. So what we talked about yesterday at the day trading group, no, the swing trading group, is the possible kind of move this way. There's sort of two ways of looking at this. This could have been a straight up, okay, pull back out of position type trade, or the black path, and that's the one that's taken. So if you wanted to be a bull today, you could be. You're already about 4 hours late, so you could see this as a London Open. Okay. Yeah, Raymond, I'd like to do another trip to South Africa, to be honest with you. I think it'd be interesting for sure. Yeah. I'd like to, I'd like to actually visit some of the natural resource production facilities. Zambia? Well, dude, I'd stop by if I happen to be nearby. Yeah, no, look, actually, I am really, I want to travel again. I love traveling. I've been, when I was a young man, I said, and some of you guys know my origin story. I was standing on a corner in a tiny town, a gas station, in fact, because it was the best place to hang out in my town. One light in this town. And I'm in the middle of rural Canada in a tiny town. And I'm standing there. And there was one moment in time, okay, like a crack of a whip. I said, I want to get the hell out of here. And I want to see the entire world. And I've been, well, if not blessed, certainly focused on doing that. And so, yeah, I need to get moving again. So, yeah. But anyways, yeah, right? Yeah, I would love to take a look at like gold mining facility, chromium mining facility, maybe diamond, all that. I'd love to, get out and see the earth, if you will. I want to see the industry of South Africa, get some pictures. All right. All right. So that's what we have in play. Okay. Oh, yeah. So anyways, what I want to say on that last comment, because I'm going back and forth, I want to do this, but I want to do that. If there's a place on earth where we can get 25 people together, I'm interested. Okay? I just need to cover my costs. That's all. So if there's somewhere on earth, I want to go. So put it together. Let me know. Let's go. I'm into it. Let's go. I'll put you in my book, make it famous. All right, so anywho, we're kind of looking at it this way. And so the up, the down, and the up, okay, is very plausible. Obviously, everything has to do with the Fed meeting next week, right? Cool. There's a little bit of spice in there. All right. Pound. Okay. We talked about this yesterday as well. You got to mark this first line in the sand. It's not a good line in the sand, but it is one of the lines in the sand. And you can see, okay. See what's going on there? So one of the things we talked about yesterday is the, a trap and break strategy. Right? So you play it that way. Now, I often prefer bigger pullbacks, but it's sort of like plan A is, this area. Well, let's do a different color. Okay, plan B is more like this area. Okay. So that one worked. It means there's not much of a pullback. So, you could read it two ways. Some people read that as it's more, more aggressive. It's so bullish. I look at it like it's probably low volume. No one actually sold it. So it kind of net, we're right back to where we were. Is kind of how I look at that. If you look at Kiwi dollar, you can see over here that we've had two giant weeks that benefited New Zealand. Okay. I want to bring this up. There's a role reversal, and then I'm going to guess that this is where the future 21 is going to be in a week or two. And so I'd look at that and then drop into, we'll do an hour, and say, oh, cool. Based on the future 21, this might be an interesting place to look for a rollover. Okay. The next one is higher than that. So, you can go like that, and then you can go like that. So there's 2 or 3 different areas here, right? So how would we dumb this down? How about 61.5? And what do we want to call this? 62? Well, you can't deny that we're right on a price here that's pretty interesting as well. But nonetheless, this has been up for a couple of weeks. And all I'm saying is just because it's up for the last few weeks doesn't mean you should buy it. Okay? Because it's happened, it's already happened. That's last week's trade. So the more astute thing is, look for a change in direction here and try to predict the future, not try to grab the past. If you were trading the past, this area was your buy zone. Okay, we call that, it's not really a 1, 2, 3, but I suppose you can call it more like an inverse head and shoulders. Okay. So typically what you do in this scenario, just as a guide, I don't know if this is actually valid, but this is what people do. Oops. And then you, okay, project up from the neckline. So, you know, does that get us here? Maybe it does, huh? 62-ish is what that says, but whatever. What I'd rather do if I were me is just say to myself, if it's anywhere in this area and then puts together some sort of reversal pattern, then I want to be in this longer term downtrend. If that's how you read that chart, huh? Maybe you read it differently. But I read it like this. Okay. What do you stink? Smell like a plan? A bullish crown. Well, it is a crown. You're right. A bull crown. Is that what they call it now? It's inverse head and shoulders. Yeah. Frank says most traders are waiting for the FOMC. Yeah, for sure. For sure. Oh, for sure. Oh, for sure. Aussie slowly working its way up. Okay. Look where we are now. This is where we are now. Seems like this could be a challenging price between, I don't know, what do we want to call this? I mean, we're at between 67. We're already higher than that. I wanted to say 67.50. Let's just put that between 67.50 and 68.50. The next 100 pips on this are going to be challenging for bulls. Okay, we have resistance. We also have the M2, M4 pattern. Okay, and we have the mean. So it seems to me, you know, that there could be a spike in here, maybe even here. That'd be even more interesting. 69.5, 70, no, 60. Yeah, let's just play that. Wouldn't it be interesting if this goes up, comes down, Fed meeting spikes it, we hit 70, and that's the end of that? Yeah, I could see that. Have I looked at gold yet? No. Yeah, that's all I smell is the Seiko. Tobacco plants are interesting because if you had a plant like this, right? The leaves down here are kind of mineral, even metallic in some cases. Up here is exposed to the sun, and here's slightly less sun. And the part that I smell in this cigar is from this area. So I think what they have is there's spice in here. So they've taken some leaves from here and here, and then realized they don't want it too strong, but they have that flavor in it. And to make the cigar a little thicker, they put this stuff in here. Shouldn't change the flavor. It keeps it dark and spicy. But I'd say half the filler is just truly filler. They don't want to change the flavor anymore. They don't want to make it too strong, but it has to be thicker so it burns more, it burns cool, provides a lot of smoke. Anyway, so I can smell that in there. There's a slight sweetness to it, which is quite nice. All right. Let's do some commodities. Should we show the whipsaw on oil? I guess so. Look at that, huh? Oh my gourd. Okay. Now the interesting thing about oil, let's get rid of that trade plan. Okay. And I think what we want to do here is highlight the best support and resistance areas, and we already have. Like, what does the monthly say? The monthly says this can go up, if not even should go up. But it's a slow process, and that buying low is the name of the game. And you can see, I mean, you probably don't like the volatility, but on the higher time frame, this is, if you're a bull, this is what you would expect to happen. Okay? And on the small time frame, it makes trading difficult, especially when you get failed higher highs, right? Very difficult, and especially on oil, it's expensive. So it feels like a bigger deal than it really is when you're in a trade like this, because, you know, it's like 72.5 to 69. That, right? That is like a $3,000 move on one little tiny trade. And it happens so quickly. And then it reverses so quickly. It's really tough. That one's a tough gig. And now we're just neither here nor there, so it's not a good trade one way or the other. Okay? But the key takeaway is it seems like these are being respected, huh? Like that was an important price before we even got there. Which means orders were already in the market and they already knew the central pivot. So I would interpret this as if you like to trade WTI and you don't use monthly pivot points, you are missing some information. You're not reading the market as well as you could, because quite clearly traders had orders in the market at that price. So you need to know these prices. Okay. And now that if you scale out the volatility, all we did is really retest this area. Now you don't like those wicks. Nobody likes the wicks. Although someone might have had or it looks like somebody had a buy order down in there, and so they got filled quickly, and holy smokes, yeah, so they're liking it. But the way I would treat this on the short run is you got to mark these areas and consider them top of a range. Mark this area as the bottom of a range, and there's many ranges, right? So there's like, it could do this. So I suppose we'll need to mark that one as well. So for next week, bulls want to buy it again off of 70. So we hit 70. The thing is, do you think it's going to go to 75? Do you think it'll go to 80? Janet, I would agree with that. I don't prefer the 1 minute. I prefer the 3 minute and the 5 minute. Okay. Yeah. Yeah, the 3 minutes actually, I think, better. I traded the 1 minute for a year. Then I used 2 minutes and it didn't really change anything. Then I went to 5 minutes and it was good, but I could even cut the corner, like we're only talking about like 5 pips, but I could get an extra 2 or 3 or 4 or 5 pips on the 3. So the 3 is fine if you know how to trade the 1 and you're just and you've done the 5 and you're just splitting the difference. Yeah. Where do you get the 3 minute chart? So this was on an old platform before MT4. Okay. Seems kind of random, but it's not. You have to think about it like, let's say you get really good entering trades on your 5 minute chart. Yeah, there's a periodicity tool that you can use. Okay. But no, it's not that it's a fib number. It's just, let's say you're waiting for a 5-8 cross up. On a 5 minute chart, that could be a half an hour. So I could cut the corner and drop it into 3 and get it in 20 minutes instead of 30 minutes. And I might pick up an extra 5 pips. So, that kind of stuff. Because again, how many candles will it take before that 5-8 turns up? Okay. Charlie Binder's trying it. Yeah. But remember, it's only tactics, Charlie. You have to have your strategy already done. Okay. I do not make decisions on a 5 minute chart or a 3 minute chart or a 1 minute chart. There's no strategic decisions. You're kicking down doors and go, right? 2 in the chest, 1 in the head. You don't even know what happened. It's so fast. There's no decision making. The bad guy's in that building. Breach the door, pop, pop, pop. Pop, pop, pop. Okay, no thought process. All automatic at that point. Okay. So check this out on Mexican peso. This is the day trade, which you knew yesterday. Remember yesterday's trading plan. Sell here, exit here. It's written on the chart. I'm not even joking. Bearish profit target conservative. And this is the bearish entry zone on Thursday. So then at the end of the day on Thursday, we know this is this, see, it's even labeled bearish selling zone. And based on that, so here's your touch. Check this out. Bearish conservative target. And right now we're trying to figure out Monday's sell. You should join the day trading group. You should join FX Bootcamp. You get this template included in your membership. Take the training course. Look at that. Sell, exit. sell, exit. Look at the accuracy, guys. Cray cray. Anyways, what's interesting about this? This is South African Rand. Do you know what that is? Yeah, Highlander. Yep. I spoke to the powers that be. They're going to talk to their liquidity providers and see if they can do something. See? Huh? I fight for you. Okay? This area here, we predicted on January 1st, 2023, that 19.8678, is that accurate enough? Would be the top for 2023. And on June 1st, we hit it. Okay, we touched it for the first time, and the uptrend is over. On January 1st, the prediction. On June 1st, halfway through the year, we hit the top. What do you think of that? Quite a coincidence, don't you think? Huh? You love that? It's crazy, right? Here's June 1st. Look at that. Actually, that's not June 1st. There's June 1st. Cool. Those are 4-hour candles. Yeah. How many people find that helpful? Look at that. I mean, when you go to the daily chart, look at the accuracy. That's the only candle that actually went above the actual target, but only for what, less than an hour? Let me zoom back in. I don't even know if I can do it anymore. Zoom. It spent 15 minutes, a couple of pips above, and then collapsed. Yeah. How is that level determined? Measuring the previous period, okay, with a weighted average. And then basically looking at the standard deviation over that period. Okay. Amazing, right? Now, David, the year before, we had a pattern. This is the best selling price of the year for bears. This is the best buying price for bulls. All predetermined. Okay, that was set in stone and locked on the 1st of January. Okay? So on the 1st of January of 2022, we would assume, of course, we don't know, but you'd assume bears are looking for that and bulls are looking for this. Now you might be saying, well, bears sold here, right? No, they did not. No. Bears don't sell up there. That's bulls selling. Bulls are taking profit because we knew on the first day of the year that that was the target. That's where you get out. That's where a bull sells because they're already long. So what does a bull do later after he's made money? What does she do next? Well, this is the next buying opportunity, and this is the exit. So bulls buy, bulls sell. Bulls buy, bulls sell. There's no bears on this yet. Okay? A bear will never sell this until what? Well, until we come down here, rise up, and do something like that, because now we have a double top. We haven't had a double top before. Not in the last 2 years, right? So the next one would be lower low, lower high. For sure, absolutely, totally for sure, bears are selling this. That's risk on, and we're not there. Okay? So right now, only bulls are participating in this market. And that's all risk off. Okay? So when we were here a couple of weeks ago, I said, now's the time to go to South Africa. Time to go do a vacation. Eat some spicy eland sausage. I like the zebra this time of year. Yummy. Okay. Peso's been the giver, though. Okay. Just loving it. Just loving it. Okay. Let's take a look at the stock market. Well, David, my concern is a higher time frame. My concern is the stock market. My concern is the bond market. My concern is the Fed meeting next week, none of which exists on your 1 minute chart. So yeah, you might be zoomed in too much. Okay, what I am looking at here, these are weekly candles. Okay, weekly candles. And my projected high for the year for the S&P 500 is 4,327. Okay? And if that holds and acts as resistance, I didn't spell that right, did I? No. Anyways, okay. Okay. Then sell, aka risk off, target equals 3,000. Okay, so if this 43 to 44 area holds and then falls, I'm targeting 3,000. That means the S&P 500 would slowly or quickly fall the rest of the year. That will mean recession. Yes, it will. That'll mean risk off. I'll corner the market on dollar. Okay. Yep. Yep. And a bunch of other things. We'll fall into deflation. And I suppose that's what the Fed wanted. That would be disinflationary. I don't think the real estate market's going to fall, so therefore the stock market has to fall. Okay. Tidal Wave says, I tried to short it. Yeah, no. There's no, well, I know this is a weekly, but look at these candles. You should be able to draw an oscillator, right? There's enough information here for you to draw oscillators. And you can see no lower lows, no lower highs, but no lower lows. So, right, overbought, 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 overbought. Okay, look at that, inside. And then all of a sudden, up and up and up and up again. It's making higher highs, but not lower lows. Oh, yeah, okay. You were talking about the other one. Okay. So what we're looking for is this is either going to, let's say I'm right. Let's say this goes down. This could be, this candle goes up to here, and then Monday, Tuesday, Wednesday, Fed brings it down. Okay, and therefore the rest of the month is that way. That's what could happen. The Fed raises interest rates. There's about a 1/3 chance or 1/4 chance that happens, but let's say it happens. And the Fed says, we have a lot more work to do. We have to raise interest rates higher. That's what happens. Or they pause, but then they say, we have more work to do. Okay, so the pause weakens the dollar. And then in the press conference, less than an hour later, we're going to raise interest rates more. We're just pausing. So in the next meeting or two, we're going to do more. That's what we expect. Boom, dollar strength. Okay, what else could happen? Okay, they say we're going to pause. We're interested in raising more. And then somebody asks about cuts. And they say absolutely, totally no cuts are going to happen. This comes down. So Tidal Wave says, is a pause still being priced in? Depending on the day you look, but 60 to 75% chance of a pause. Isn't that nice? You got to know these things. How do I know? I checked yesterday. Okay? Yesterday, I think it was a 74% chance of a pause. Okay? But these things change. Got to know these things. Richard Spencer says, yeah, there's a lag. Yeah, there is a lag. Yeah. Yes. Yeah, it happens, right, Richard? It happens. The market was wrong. The market was wrong. Okay. Cool. So anyways, watch that. Watch your NASI. Still very, very bullish on the daily. Okay. Little bit of vulnerability on the 4-hour. You got to roll it over this way. And once again, a simple trap and break strategy. Okay. David says, Wayne, can we see how you structure your journal book? That's what strategic and tactical Forex trading shows you. That's 1/3 of my book covers that. Yeah, it's come down. They used to charge $90 for this. Cool, it's coming down. Yeah, so I want my new book to be half that price. But look inside. Chapter 16, 3x the Forex, or 3 times the Forex. Chapter 17, target practice. Chapter 18, 3-year plan. So from page 183, no, I suppose it's actually here. Page 195 all the way out to 223 is just on keeping a journal properly. Cool. Man, I haven't looked at this in a long time. 21.55.8. Check this out. If I brought up MACD, it's still the same. Cool. Lovely. Lovely. Cool. Neat. I haven't looked at it in a long time. I should buy a copy. I should buy a copy, huh? Kyle, still the last one, huh? Would you please leave a review? I'd appreciate it. Monday says, it's funny because much of the advice is to stay away from the 1 minute, right? I spent 1 year trading the 1 minute chart to see if that was true. And what I discovered is people were right. They would say you shouldn't trade the 1 minute chart because they didn't know how to do it. So I'd agree with that. It reaffirmed the importance of strategy. With a strategy, and I don't mean the way you enter trades. That's not strategy under my definition. Okay? With some refinement through bias and top-level analysis, you can trade the 1 minute chart wonderfully. Okay? So for example, here's a 4-hour on the NASDAQ. And let's say during this drop, you believe this, right? This old pivot zone was going to be support. That was your belief. And you also know that this is the 21 EMA on the daily, right? So whatever made you think that? Let's say you just thought, okay, that's the 21 EMA on the daily, and you're a bull. So you say, okay, now that we're at that price, and remember, that's very definitional. You can look at the 21 EMA and you can get the price. Okay, so you say at 13,500, I want to drop into a 1 minute chart and buy dips. Everybody follow? You'd have to be on this side to know it. Okay? 13,500 is right here. Yeah, see? Okay. So it gets close to 13,500. I don't think I'm going to be able to go that far back on a 1 minute chart. 12, this could take forever. Guess I could have picked something better, huh? Did it just reset right back? No. La la la. La la la. June. We're in May now. Okay, 13.9, 13.8, 13.7. We're getting there. 13.6. Although I saw that zone back there. Yeah, I think this is where we were. Okay. Yeah, 13.5. Okay. So we get down to 13,500. This is it. And we're thinking we want to get long. We want to buy dips. Okay. You see? Let's refine it. Here's your 13,520. We know somewhere in here we want to buy dips. Okay. Is that a dip? Can you see these role reversals? R high, R low, right? Okay. You want to mark these things? How are you going to mark this? La la la. La 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 la. Just trying to see those. How far did it change? I just clicked out. I might have messed it. Where's all the other little markings I had? Anyways, I think you get it. Okay. I think you get it. I can't filter it out. MT4 doesn't do a great job of it. But anyways, you start with your strategy first. You want to buy the S&P 500 on the daily 21 EMA. You identify what that price is. And then, yes, can you use a 1 minute chart? Sure. 3 minute and 5 minute work probably a little bit better. But 1 minute for sure. But if you only are looking at the 1 minute and you have no idea about the daily 21, then there's no strategy. And you're going to have very inconsistent results, in particular on the 1 minute. So most people will tell you, you can't trade the 1 minute. What they're telling you is they can't trade the 1 minute. I spent a year trying, and that's how, that's what I learned. I reaffirm the importance of strategy. Okay. Monday drops to a 15 before the 1. That's okay. But you don't want too many levels of confirmation. Okay. What I find people do when they're doing 2 or 3 steps, what they do is they're slow into their trades. So let's say the goal is to buy it at 13.50. That was the goal of the strategy. Okay? So if I drop, let's say, into a 5 minute chart, I'm probably going to get in quite close. Now, if you go from, let's say, a daily chart and then an hourly chart, then a 15-minute chart and a 5-minute chart, you will get into a trade, but significantly above the actual strategic entry. Do you understand? Like the goal, if you've already made the decision, your goal is you want to get in here as close as possible to that price. Because it doesn't matter if your entry is here or if your entry is here, your stop is still in the same place. Whatever that number is, it's going to be valid. So let's do this in pips. This might be 50 pip stop. This might be 100 pip stop. Okay. Okay. And so, yes, you took you took a couple extra steps to confirm, but now you're risking twice as much on this one individual trade. Because your stop has to be 100 pips away instead of 50 pips. So I would take some steps out and say, dude, if it reverses on a 5-minute chart on the daily 21, that's what I want to do. Well, what about the 15? What about the 30? What about the hour? Like, dude, just make the decision strategically. Do you use the daily, the 4 hour? I don't know. Do you use the 2 hour? I used to use the 2 hour. Okay? But pick one. And that, like I said on this trade, would be buy at the daily 21. Cool. So now you drop in, and on a 5-minute chart, maybe you enter. Okay? We already have it fibbed. You can see it. There's a little fib going on in there. Up, 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 down, down, buy. Right? So you're long in here. And it, obviously goes up, comes down, comes up, comes down. And by the time you're way up there, now you have the bigger breach, which is part of your longer term strategy anyways. And you certainly got your stop at break even now, right? So Is adding the 15-minute chart really necessary? I don't know. Instead of using the 1 minute, try the 5 minute. Okay. So let me leave you with one closing thought. Let's say you're a bear and you're like, NASDAQ's coming down today. Okay. You're at resistance. Cool. So when you get close to 14,500 to 14,600, well, we're at 500 now. Let's say between now and 14,600. Okay, so let's mark that. 14,600. Okay. To where we are now. Let's just put that in there. It's good enough. Okay. Now you can see we already had this marked out, so I'll just leave it. Okay. So somewhere in there, you want to sell. Only if you're a bear. The bearishness is the strategy part, guys. So there's nothing on this chart to tell you to do it. You just already need to know that you want to do it. Great. Now you drop into a 5-minute chart. And what are we waiting for now? Some form of reversal pattern. How about something as innocuous as a 21.55 cross down? You're like, Wayne, that'll take like an hour and a half. Uh-huh. Okay. Well, revelations carry through the thought process. Okay? How about this? If the NASDAQ does fall today, let's say that's the price action for today, what happens to the US dollar? Revelations. US dollar strong, US dollar weak. Which one? See, I'm a macro trader, so if I'm showing you this chart and we're having a conversation about this chart, I'm talking about 7 or 8 or 9 or 10 different trades. So I just talked about gold using NASDAQ. Yeah. Dollar gets strong. So what happens to gold in terms of dollar? Remember, 1 ounce of gold never changes. But the USD changes. Okay? So if you're saying, well, if tech comes down, dollar gets strong, so XAU stays the same, dollar gets stronger, so now $1 buys more XAU, so this pair as an asset falls. Done. So anywho, I have some big changes coming at FX Bootcamp. Looking forward to that big change. So don't freak out when it happens. There's some really cool stuff on the way. Yeah. Also some good changes coming at QuantBox. Very cool. Looking forward to that. Yeah, Revelations, you're welcome to join us at the FX Bootcamp community. It's pretty awesome. What will be the summer class? I'm trying to clear up my schedule to even be able to contemplate it. But my thought would be trading stock indices, like a mini course. Instead of one giant, like 18-hour course, I thought maybe like a 5-hour course on trading stock indices and maybe a 5-hour course on trading gold. What do you stink? Smell like a plan? Anybody into that? Revelation says, I hope you drop the what do you want? You mean you want that for free? My costs are doubling. Did you know that? My costs are doubling. So should I cut the price in half or should I double the price? What would you do, Revelations? Oh, yeah. Well, you think things are getting cheaper in the world? No. Yeah. So, yeah, my costs are skyrocketing 100%. Cut it in half? No, that's not me. Right? No, that's not me. No, that's my costs are doubling. Yeah. When is what going to happen? My costs are, yeah, no, but I'm not going to raise prices. But what I'm doing is I'm taking, revenue minus expenses and then putting that into R&D. Oh, like right now. Highlander, please, please. A small little enjoyment. Yeah. So anyway, I take revenue minus expenses and then I'm reinvesting. So there's some new things coming very, very soon. Yeah. So it's getting better, even though, right? So anyways, I'm doing what I can. I hope it's helpful. I hope you like it. I hope it's useful. I hope it helps you improve. Okay. In fact, I was, on the EIA website for a couple of hours yesterday trying to figure out what can be done to create an oil trading tool. Instead of having to go to OPEC, instead of having to go to EIA, instead of going to the IEA, instead of going to Baker Hughes rig count. Wouldn't it be cool if you just had an oil trading page on QuantBox that just did all of that for you automatically? Inventory level, production level, all that kind of stuff. Yeah. Yeah. But see, you got to know this stuff, right? So we had a funny situation in the swing trading group. Somebody yesterday said, what's our production level? 13 million barrels a day? And I'm like, 13 million? Pfft, don't be stupid. It's 12.3. We're all laughing. Right? Then someone else says, close enough. I'm like, well, no, I don't know. I round down, right? 12.3. It's closer to 12 than 13. But anyway, so he wasn't wrong, obviously. Yeah, it was more than 12, right? But to even have a concept of that's the output of the United States right now, and maybe the 20-year average is more like 10, but we're producing more than 12. And I also know the 5-year production prediction, the prediction of production. We're on our way to 13. Yeah, so he is right. That's the future production. And you tie that in with potential recession. How do you know that? Well, you know GDP and GDP growth and the future projections. And all of a sudden you're putting two and two together where you're building your own supply and demand models. But most retail traders don't know jack. They're staring at their 15-minute chart and they're going to buy it or sell it randomly. Well, someone's got to put my kids through college, and I'd rather they pay for it and not me. Trading oil is a tough gig. So to have a page that specializes in oil supply and demand economics, yeah, I spent hours, on it yesterday. Tidal wave that is possibly in the R&D, yes. Yeah. And the risk on, risk off, as you call it, is analyzing an aggregate basket or evenly weighted basket of assets in sort of a risk on, risk off scenario, as you're saying. So yeah, that's in the pipeline. When you said you should invest coffee a day into the stock market, I didn't say that, but I tell the story of compound interest through Jim Cramer's story of before he worked at Goldman Sachs, he was homeless. But besides that, he put $50 a month into a mutual fund. Now, I don't think that made him rich and famous, but I think the attitude shows you what's required to be successful. So while he was living in the back of a car, he was investing into the stock market. Okay? Now he's super rich, super famous. There you go. Does Jim Cramer have a degree in something? I don't think so. Maybe. Okay? But you have to understand the secret is compound interest. And you want to focus on doing nothing but lowering volatility and producing consistent results. Okay? You can make a portfolio right now that always makes 4% a year. Did you know that? Money-making machine, as they would say in some pitch. Prints money. You can earn 4% a year if you take 15 non-correlated assets with a 60% chance of profiting over long periods of time. It's the Ray Dalio all-weather portfolio. The only thing is you have to be comfortable. In years the stock market's up 20%, you only make 4. But then in the years when the stock market is down 20%, you make 4. And when the stock market's sideways, you have to feel okay with the fact that you made 4%. Now, there's ways to improve it, and of course, I have. But nonetheless, the issue is compound interest. So you could do a calculation. If you put $1,000 a month into the stock market with that type of portfolio that only earns 4%, but earns 4% all year, every year, you could do the calculation. Okay. David says, well, I get 3. Yeah, well, that's now. But if you're talking about forever, if you're not a professional money manager, then you should be more interested in like, what's the next 30 years going to look like? Well, add $1,000 a month times 4% a year. Okay, what is that? Every 13, 14 years, your money doubles? Okay. Okay. Okay, which means in 13 years, your first 12,000 is turned into 24,000 just in your year one. Okay. Then another 10 years goes by and your 24,000 is turned into 50,000 just from your first year. So now enough time has gone by that you have to retire. You put $1,000 a month aside for your retirement. So that's 12,000. And by the time you retire, an old person too old to work, it's 50. And you're like, dude, I think I only made 50 grand a year that year. We're talking about year one. Your $1,000 a month is now 50,000. Oh, sweet. At only 4% a month. Now, there's other problems, right? Inflation can eat into it and all that kind of stuff. But the thing is, you need to think in terms of that. So, if you bought a car, let's say you're retired today, you just turned 70. But instead of saving, now I'm going to put it in terms of the previous example as if it's today's money, but imagine 30 years ago when you were 40, you decided to spend $1,000 a month on your car. Now, the way you look at your car 30 years ago, relative to now, it's a piece of shit. Pardon my French. And now you regret it. You're like, dude, I spent $1,000 a month on a car. I thought it was so cool. Now it's a pile of junk. Plus, there was maintenance costs and insurance costs and all that kind of stuff, right? And you're like, I could have had 50 grand in my hand now that I'm retired. 50 grand. You're like, dude, I could probably live on that, is what you're thinking, right? You're like, a whole year I could live on the 50 grand. But no, instead you bought some piece of junk car. You wasted your money. You're like, well, it was only $1,000 a month, Wayne. I had the $1,000 a month. I could afford the $1,000 a month. But the thing is, a self-made millionaire thinks about the end game when they're 70. And they're like, $50,000 a year that car cost. That piece of junk car. You're like, I'd rather have the $50,000 now. Thank you very much. Okay? Well, yeah, so Richard brings up the yellow Beamer attracts investors. I'll tell you the funny thing about cars is they usually don't impress your clients because they're richer than you are. Right? And, I have a fancy car. My wife thinks it's stupid and I should get rid of it. My kids think it's funny. And wherever I drive around town, dudes love it. So if I want to attract young men, you waste your money on a fancy car. Yeah. The thing is, here's the thing. This is where everything comes in, right? I spent the equivalent of a week's salary on my Porsche Cayenne GTS Magnum, right? So if you've spent more than a week or two on your car, then you're paying more than me, right? So when somebody earns 10 grand a month and they're spending $1,000 a month on their car, well, after taxes, they only have 6 grand, right? And they have a $1,000 car that they're leasing from BMW. And I'm like, dude, you're spending what, 10 to 20% of your annual income on your car. Dude. And if it was only a week or two, you just pay cash. You just go cash, boom, boom, boom. You don't need a loan on your car. Well, that's the dumbest thing you could do, right? So you're like, if you spent more than a week or two worth of income on your vehicle, you're not doing it right. You're not rich enough to afford the car. Oh, but it's a nice car. Yeah, it's a nice car, but you can't afford it. And when you're old, you will be poor. And you'll regret being poor in lieu of having that nice car when you were young. It's terrible. It's really, really backwards. Who are you impressing with that BMW you can't afford? It's not impressive, is it? Okay. So, but I don't have any money. My money is in my retirement account. It's in investments. It's in my home. Okay? It's in college savings accounts. All tax-free, right? Well, not my house. Pay plenty of taxes of that, right? Yeah, Richard says he's got a friend owns 10 gas stations and drives a cheap car. Yeah. A friend of mine, he went through an IPO and he got $40 million on his first day. It's now significantly more than that. A lot more than that. But on the first day, he made $40 million. And he went to Subaru, bought the cheapest Subaru Outback they had on the lot. This thing didn't even have hubcaps. Yeah, he's conservative. Yeah. So anyways, I guess it's Friday. I guess we're having a money talk now. Wealth is, I wouldn't say it's easy, but it's straightforward. It's mathematical. You can build some models with some very easy variables, and you can calculate how much money you'll have in 30 years. And if you thought that way, you would change the way you handle money. Money is bad. You have to get rid of your money. So you can buy assets that lose value, or you can just consume. So you drink it, right? You drink it. You go to the bar and you drink your money away. Okay? You buy a TV. Same thing, it's consumption. So you either buy worthless things like TVs, or you buy assets that go up in value and ideally earn you income on top of going up in value. And then you do your basic calculations and you know exactly how much money you will have. And then you can reverse engineer the whole thing and say, if I buy this TV, it's on sale for $1,000. It's an incredible TV. What an amazing deal. And you got, let's say you got $100,000 in the bank. You're not broke. You're like, dude, this is a beautiful TV. But someone that goes from rich people have a lot of money. In particular, they have a lot of income from their job, but they're not wealthy. So if you're rich, you're like, I got 100 grand in the bank. That's a beautiful TV. It's usually 3,000. I can buy it for 1,000. That's a good deal. I will buy it because I have the money and and this is a good deal. However, someone that becomes wealthy looks at that TV and says, okay, yeah, that's normally 3,000. It's now 1,000. That is a good deal. I already have a TV. Is this significantly better? Maybe. But if I buy this TV, it will cost me $50,000. Because in 30 years, the $1,000 I spend on this TV will compound and become $50,000. Is this TV worth $50,000 to me? Then you make a decision. It's not that you got the money. It's you have to place a value, future value. Okay? In that case, it's the present value of future compounding of your money. Your money growing over 30 years. All of a sudden you're like, dude, that's a nice TV. That's a good deal. But I already got a TV. I'm good. What's your goal? To impress your mom? To impress your friends? To feel good about yourself? Or when you're too old to work, you can live very comfortably. Or maybe you stop working early. Maybe you retire at 50 instead of 70, 55 instead of 70, 60 instead of 70. Why? You're like, I have more than enough money. When you get to that point, you are wealthy. You're not interested in growing your account. You have enough money. Somebody actually said that to me the other day, in fact. He said, well, I don't really need capital appreciation. He didn't. You know what that means? He's like, I don't need more money. That's what he told me. I don't need more money. Okay, so when you get to the point where more money doesn't really change anything, you're wealthy. Okay, looks like the stock market's opening, huh? So when you're young, you should earn income and save as much of it as possible. Make lower risk, lower volatility investments that compound steadily over long periods of time. And there will become a point in your life where you'll have more than enough money. And that's the day you go wealthy. So you want to grow your account, and that makes you richer and richer. You have more and more money, but you're still contributing. It's growing and you're contributing. It's growing and you're contributing. It's growing and you're getting a bigger and bigger asset. Okay? That makes you rich. But the day you don't have to work to earn money is the day you become wealthy. You quit your job, you stop working, and you have enough assets that produce income where you're like, your mortgage is taken care of, your food, right? Your medicine. You got enough to do your little vacations here and there. You're like, everything's good. And you don't have to work to live a comfortable life. That's what your every waking focus should be on. At the end of your life, you'll have a scenario, okay, in which you live free. Richard says, hey, he wants a farm so he doesn't have to worry about food. Yeah, that would probably be a good use of money. Convert that money into land capital that could produce income so you can grow food. You can sell your excess food for income. But it's also an asset that appreciates. Better than a TV, Richard. Okay? So you have to get there. All right, so the markets are opening. It's time to go. I hope you had a wonderful live stream at Forex.Today. Would you be so kind as to click the thumbs up button as you go? I hope you have a wonderful weekend. If you're in my day trading group, I will see you on Sunday. And if you're a member of what should I do? I guess most people are FX boot campers. So, okay. As a member of FX boot camp, as a video only member, as a swing trading member, or as a day trading member. So all members will be invited to attend the Fed meeting, the interest rate decision by the FOMC, and the follow-up press conference. We can do that together. So put that on your calendar for Wednesday. So peace on earth. May the pips be with you. May your profits be above average.